Looking at the Markets with David Modell. Hello and welcome to Looking at the Markets with David Modell. I've got one of my most popular guests and a chart expert on right now. He is Jake from TrendSpider over at TrendSpider.com. Their charting tools are amazing. You're going to want to check that out after you are finished listening to this, or you know what, I'll even let you interrupt the video if you want to go check out the link in the description below for TrendSpider.com. We're going to talk about some charting ideas, raindrops, volume, candlesticks, all that cool stuff, and maybe even a special offer. So, Jake, welcome back to Looking at the Markets, sir.
Hey, thank you so much, Dave. It is so nice to be back. I wanted to first, thank you so much for having me again.
Yes.
Second, wanted to mention that we do have a giveaway right now. So anybody who's interested in possibly winning a free account for a year can just go to our Twitter page at TrendSpider and go to this pinned tweet that we have here, and you can sign up for your free trial, or you can go to that link below. Either way, essentially, this thing will be kind of going back and forth with our presenters for the presentation that we have coming up on Sunday, which is Lessons from Volatility. So I don't know about you, but I've been stuck in my house. And if you haven't been, I'm not sure how you got away with that. But, on top of being stuck at home, we've been dealing with this crazy volatility in the market. So essentially, everybody that we have been following, everyone's got a different perspective on the market. So we decided to bring everybody together, some of our partners, and really get their perspective on this recent volatility. Everybody has a different perspective in this group of people. Brian Shannon with the Alpha Trends Anchored VWAP. You've got JC Peretz with All-Star Charts. Everyone's got a different type of perspective where, it's not just going to be the same chart over and over again that everyone's sharing. There's going to be different indicators, different perspectives. We're going to do a couple different events where I'm going to be the moderator, and then we're just going to kind of get two different views from somebody in Forex and crypto. And then also we're going to do a bull versus bear, I don't want to say showdown, but kind of looking at both the bullish and the bearish side of the market, not necessarily having to take a bias, but more so looking and saying, okay, what is the perspective that the bears currently have? What is the perspective from the bull side? Because when you're trading, you always want to know the other perspective. You don't want to be one-sided, because then you'll always be kind of blinded or just too biased to understand why something may be going down. So I just wanted to mention this event as well. You'll be able to sign up through that pinned tweet that we'll have up on Twitter. And, that is something that is going to be just a ton of different knowledge and education, and it's obviously free of charge. It will be on our YouTube channel at TrendSpider is our channel name. So going in.
Could I just say that is a stellar lineup there, and that's a free event, folks. Why wouldn't you check that out? April 26th, 10 a.m. to 2:30 p.m. Eastern time. For goodness sake, check that out. Why not?
Yeah, no, absolutely. We are blessed to have such a lineup. I mean, these are some of the best guys in the industry, and it's not just stocks. It's crypto. It's Forex. It's a mix of everything. So, we are really excited for this. And, at this point, everybody's still stuck in their house. Might as well get some free education while you're at it. So that is Sunday. And at 10 a.m. Eastern, we will be starting the event.
Very cool.
All right. Into the raindrops. You mentioned raindrops earlier, and people are probably like, what are you talking about, raindrops? It's sunny outside right now. The raindrop is something that I think we've touched on before in some of your videos, but, it is probably one of the most unique features in the TrendSpider platform. So that's why I want to highlight it and show you guys in a real life situation how you can really use this even today. So this is the raindrop. You can see here we've got two different halves of the raindrop. You've got the left, you've got the right. And then this this means that the left side here is your first half of the period, whether that's the 30-minute candle, whether that's the daily candle, it'd be the first half of the day. And then the right side is obviously the second half of the day or the 30-minute time period that you're looking at. And so instead of a regular bar chart with this bar being your open and this bar being your close, this is your volume weighted average price for the first half of the day. And then on top of that, you have overlaid the volume profile for that range of the candle. So you can see here, during the first half of the day, almost all of that volume was centered around the lower part of the range. And then into the second half of the day, you can see the volume profile shows that there was volume that was taking place at the top of this range. So we know from the left-hand side, since it's flat, there was no volume during that first half of the day. So we know buyers came in and pushed the price up from the second half of the day. And, sure, it looks cool, but how is this going to help me trade? How is this going to give me an edge in the market? And I will show that to you guys here in a second. But first, I want to define the different colors of the raindrops. We've got the bullish raindrop, which is the one we just went over, which is essentially when that VWAP for the first half of the candle is on your left-hand side, and the second half of the candle here is higher than the first half. So you can see that just by the function of these two bars. Now, the neutral raindrop, or the purple raindrop, blue raindrop, we've had people say both. I'm still trying to figure out if it's blue or purple, depending on the day I'm looking at it, I think. This is when the VWAP for the first and second half of the period are equal to each other. So you can see this is kind of a true volume doji. And you can see for the most part, most of that volume, the volume profile for the first and second half of the period kind of forms like a diamond shape. So going into the last color is obviously we've got to have a red raindrop, which is the bearish raindrop, simply just the opposite of the bullish, where you've got the second half of the period's volume weighted average price is lower than the first half of the period. So this is deciphering all of the different types of raindrops. Now I want to go into a real life example and show you guys why this is important. So this is GE. This is today's chart. And what I've done here is I'm showing the raindrop versus just the regular hollow candle. And so what's interesting about this is you can see in the raindrop, most of that volume is really near the top of the range today, breaking out of this symmetrical triangle. But if you look at the regular candle, notice that, it looks like sellers came in and pushed the price down, which they did. I mean, obviously the price dropped below right into the apex of this symmetrical triangle. But what we know here is we know that for all of those people that sold today, there was quite a few people that absorbed all of those shares above this resistance trend line. And so you can see that big bulge of volume above this red line where you can only see the wick here in the hollow candle, which gives you a much clearer perspective of what's really going on between the buyers and the sellers. I mean, this is easily one of the most powerful things that I have seen and used. It's something that we introduced about a year ago, maybe almost exactly a year ago, maybe a little less than. But, this has completely transformed my trading. We have a ton of case studies that we post all the time on our Twitter. But the one that I want to go over here is an example of very similar kind of what we just had here, looking at GE. Rather than a breakout through that resistance, you're actually breaking out through that diagonal resistance trend line. You're now breaking through this horizontal resistance. And this is back in December. And I wanted to show you guys, I mean, this is an example of really, here on the hollow candle, it looks like the same thing, right? The price tried to break through this resistance, but it did not actually close through the resistance.
Right.
But at the end of the day, supply and demand really is more of a function of volume. Price can easily be messed with, right? But at the end of the day, volume is going to tell you what's going on. And so if we compare the wick here to the raindrop, you can see all of the volume for the day was focused above that line, and then you've got that strong continuation up.
So it's almost like every raindrop tells a story. I really like that. That was CrowdStrike stock, by the way, we were just looking at. Now it's Facebook. This is one I like to trade. What story is the raindrops telling here?
Pretty much the same exact story, except in this case, we did have that confirmation here. So this is the thing that you always want to look for too. You want to look for a confluence between the hollow and the raindrop and the hollow candle and the regular raindrop, meaning notice that we've got a hollow candle showing buyers were in control, and we've got a green raindrop. So that's telling us that both, the price closed above the previous day's close, and we've got the volume showing within this wick. This is kind of a case where you did have a little bit of a close above this line, but it wasn't that convincing. But then once you saw all the buyers coming in here, you could tell that this is definitely something with some conviction behind it. So what I like to do is, I'll go into the last 15 minutes of the day, because by that point, this candle has pretty much formed. I mean, you've got 15 minutes of volume data that's not included in this yet. So by this point in the day, the candle is already formed, and you can start seeing if those buyers are in control. So this is just a strategy that I've played. It's not something I recommend. I'm not an advisor or a licensed person to give advice, anything like that. But what I've found some success in is going in towards the end of the day, 15 to 10 minutes before, and buying some calls, whether if it's a breakout, into the next day and swinging them into the open. So generally what you'll find here is, notice that we closed around 182, we gapped up to 184 and ripped all the way to 186. So, I mean, if you're playing the right option, you can really make some good money on just an overnight swing. Obviously, you have to keep in mind, if you're trading a short-term option, that you can really get kicked overnight by holding. But if you're an options trader and you're looking for a way to get an edge and just a confirmation of buyers in control, I'd highly recommend checking this out around breakouts and also breakdowns. You can see if it's a true breakout, is it a true breakdown, that type of thing as well.
Yeah, I really like those raindrops. Give more information than your traditional candlesticks, and you really get a fuller picture, especially with the volume integrated into it. And they also look cool, so I like that as well. Cool. What else we got?
So that is looking at volume within a candlestick. Now what I want to go over is a really cool case study from this week, CHK. And this is one that I'll admit, I did take a loss on this today, but I've been swinging it the last week. So CHK is one of those that was really interesting, right? You've got the oil crash, and then on top of that, you had a 200-to-1 reverse split. So at this point, I had traded this successfully before they did that. It had popped up. I made some pretty good profits. And so, what did I do that every trader generally shouldn't? They jump right back in. And my thesis was that, because they just did a reverse split, you're going to have a really low float stock that's pretty well known. And, what was really interesting was to see the relative strength in all these oil companies when oil was, quote unquote, going negative. Technically it was negative, but it was just, not necessarily something that was affecting the oil companies themselves. And so there's two things I used here. One, this isn't proprietary or anything to TrendSpider, but this is something that just from a trader's perspective, I wanted to share with you guys. I would highly recommend using the Williams percent range just as a way to gauge overall momentum in a stock. It's not something to, say, oh my gosh, this is doing this, I got to buy, or this is doing that, I got to sell. But this is a way that you can really look for divergence. The percent range is something that will generally signal divergence before RSI. In this case, you had both. You can't see it on this chart, but you also had huge divergence on the RSI. But I used the 5 because there's 5 trading days in a week. You know, some people may say, oh, well, why don't you use 7 because there's 7 days? Well, there's only 5 days we're actually trading. So that's why I used the Williams percent range 5, pretty much a weekly percent range. And then the second thing that is really unique to TrendSpider is the ability to say, all right, since this point in time, which in this case is this big vertical line, you can see since this reversal in early February, you can see that almost all of the volume was holding here. So to me, that tells me there was a massive capitulation event because relatively speaking, over 1, 2, 3, 4, 5, 6, and that's 6 probably times, 10. So about 2 months, 60 candles of data, you can see that 1, 2, 3, 4, 5, 6 candles had all of the volume relative to the last 60. So you could see how much volume was being accumulated here since this point in time. Generally, if you're using the volume profile, it's a function of just wherever the history goes back in your chart. But in this case, you can go and actually change that. So here on CHK, let's say that I wanted to instead start the volume profile from here. We would have seen the same thing. You know, most of the people were holding in this general area. So you could see how many shares were being accumulated here and the ability to say, all right, well, I want to anchor from, the big drop. It just gives you the ability to localize where you want to visualize that volume. And in this case, this is really cool, right? You can see that we had this volume profile starting from the drop, right? And then since this candle on February 26th, look at what happened here. Most of the people were holding, but then you also had a ton of people still generally holding in this area. And look what happened. As these people were holding, they had to endure. Let's say you bought around 31, the price went all the way down to 12. You were down 60% almost in a week. And so what happens is all of these people who, were able to hold through the storm, once the price gets back up here, shown by these big volume blocks, they want to get out. So you've got this supply kind of zone that you're running into. And that was a really cool example of where we found initial resistance here on CHK today.
Nice.
So like I was saying before, generally if you're using the volume profile would be from this candle right here, the last candle on the chart. But why would we start it here? You generally want to start or anchor things from where a status quo has changed. So in this case, this was a massive breakdown. I want to know, since this pretty much almost capitulation event, where are the people holding since February 26th? And we can see that probably most of the people who bought up here probably capitulated down here. And then the people who were still holding here are like, well, I'm getting out. And so you can see that, this whole kind of area of just flat initially was the area where a majority of these people were holding. A lot of them probably did sell off here and took their loss, but then you do see that a lot of them did hold, and that's why you've got this area of resistance, because then supply starts to outpace demand. All of a sudden you're like, holy crap, I'm break even after being down 60%. I'm getting out of this. And enough people do that, you've got an imbalance in supply and demand, and you've got what we had today, which was a nice pullback, at least from the highs.
Very nice. You can see all these things on TrendSpider.com. Link is in the description below this video, or just go to your browser, type in TrendSpider.com. And I know it's very affordable, and they do have a giveaway going on now that we just mentioned. Also a free trial if you just want to check it out. You're going to want to subscribe for sure, because it's Really the best charts out there. I mean, the way we just saw Jake manipulate those charts. Not to mention the raindrops, that's proprietary. You're not going to find that in other platforms. I like the way you can split the screen here, look at multiple views, different time frames, the number of features. I mean, we don't even have time to go through all the features here, but maybe you could mention some of the cool stuff you can do. Like with the trend lines, with the multiple time frames, all the stuff that's on there. It's amazing, Jake.
Well, one of the things I want to mention is we do have a scanner. So let's say that you did this balloon breakout is what we call it. You can go in and scan intraday for a balloon forming. So let's say that you wanted to scan the current candle. That means if you wanted to go through the S&P 500 index, and let's try to scan for a balloon raindrop right now. So the balloon raindrop is simply just when you've got a lot of that volume at the top of the range. We'll see if there's any on the S&P 500 index, just all the stocks in there. We'll just type in balloon raindrop. So we're looking for the daily candle balloon raindrop to form. Now, obviously, we're doing this after hours. So the current candle right now is the most recent candle. But if you were doing this intraday, you'd be able to scan for those balloons while they're still forming. So let's go and scan and see if we can find anything. Oh, we got a few. BWA. Oh, that's interesting. So this is one that's kind of interesting, right? You've got this area that was previous resistance, and you can see here that today most of that volume was above this resistance line. I mean, I wouldn't say, I know you're a big fan of multiple touches on a trend line to make it stronger, right. But we can still call this a resistance line. This would have been the area to watch. And today you can see that we clearly broke through it. A lot of that volume was centered at the top of the range. And so for me, that would have been an interesting one. For me personally, I like to trade GE. So I found this one very interesting today and decided to take a stab at this. I did exactly what I mentioned. I bought some of those options into the last 30 minutes of the day. I personally bought the May 15th 750s because of the volume and just the overall kind of range that I think the price can get to. But for me personally, I always want to have some time. I don't, this could easily break down tomorrow. So going into an options trade and being like, all right, I'm going to buy the $8 calls for Friday. You could have a rip to 702. And if the Greeks aren't on your side, you still may not be able to make money. So I personally like to play kind of a little further out. So that was the actual trade that I did today. This was not what I'd call a textbook balloon breakout, but you can see the discrepancy here, right? You can see that we do have that hollow candle with the wick breaking through that resistance, but we do have that volume above the resistance. So that's just a strategy that I used, but these would be ones that I would have been able to look for today into the close. Same thing here. You can see this balloon. The reason why we call it a balloon is because it's kind of got that balloon type structure to it. And so we can go through all of these, right? These are all different balloon breakouts. Wow, that's a beautiful one, right? We've got pretty much a very clean breakout right here. Mm-hmm. And you can see all that volume at the top. So it's kind of like, if you let go of a balloon, right, and there's a lot of helium in it, it rises. Mm. It's the same thing here. If you've got all of those shares at the top of the range, it's almost like the demand causes the price to rise up. And so this is why we really call it the balloon. And you can scan for these, but you can also scan for anything. Let's say that you want to scan for a MACD cross that's currently forming into the last 30 minutes of the trading day. You can do that as well. So the scanner is incredibly powerful. We do have some different scans already here that we've predefined that you can check out. We've got divergent scans. We've got just general engulfing candle scans, breakdown scans. So this is not something that you necessarily have to go and create your own scan. You can check the ones out that we've created already. And these are more or less just to, look for a specific set of conditions. Everybody has a different set of conditions that they use to trade. I know you like the Bollinger Bands and the RSI mix. You could even go in and look for some type of breakout where the price is breaking through the upper Bollinger Band and the RSI is breaking through something. So those are something that are just conditions that generally you have to know how to code. Here, you simply would go in, condition, daily, price, and in this case, we're going to go back to just your generic open, high, low, close candle. We'll say the daily close was greater than the indicator daily Bollinger Band upper. And then we do this, daily indicator RSI crossed up through the constant level of 30. And so I'm not sure if that's going to find anything on the S&P 500, but if there were any, you would be able to find those right here simply by clicking in these conditions without having to code anything in or any knowledge of, it's there. We don't have a condition. And, today we're not necessarily near the upper bands on a lot of these plays. We had, that pullback. And so we're kind of probably getting there into tomorrow. But if we did have a setup, it would show up on the scan and you'd see it within this watch list.
Gotcha. So much that you can automate, or you can be like me. You could be a do-it-yourselfer and find those trend lines manually. But why not use technology to help you? Because even if you're doing it manually, you can still get truer trend lines, more reliable. Yeah, and you could just, with the the click of a button, here come all the major, most important trend lines all at once. You can pick and choose the ones that are the most relevant to your trading. And I'm seeing a couple right here. That's on a CE stock.
Yep.
And look at that. It's as clear as day to me.
Yep, and I didn't even have to think about this. I didn't even have to add any bias. I didn't have to say, oh, well, it's in a downtrend. I'm going to try to draw a downtrend. The system confirmed that by drawing trend lines that were in a downtrend and connected, these support areas. And look at this line, right? This is a pretty strong trend line. We've got, the overall start of it here, but look at how many times it's tested. So this is a really important area if the price did break out. Same thing here, right? We've got the initial start here. We've got another start here. So this is naturally going to be the next area to watch. So without me having to do anything other than copy and pasting these circles all over, showing these areas, this was all done by the system simply by looking at a certain set of rules. You can change this analysis type, right? This isn't just like, these 5 lines are the only lines TrendSpider's finding. You can easily change this and say, all right, I want to do enhanced. Enhanced is going to find some of those closer together setups. We may be finding that lower trend line here by going to enhanced. And yep, there we go. We're able to get that. And notice with enhanced, look what we just found. We just found this symmetrical triangle without having to do anything. Mm-hmm. It just popped up. I still had the discretion to come in and say, oh, that's a symmetrical triangle. But the system did all of the grunt work for me. Yeah. And so you can see when we first do this, you do have a ton of trend lines that pop up, but that's not the point of the platform, is to just pollute the chart with lines. It's to give you a bunch of different examples of what these trends are showing, and then you still have that discretion to come in and choose the ones you'd like.
Nice. Very nice.
It's a very powerful feature for sure.
I like it. I like all of it. I like the customizable aspect of this, and just the number of features is really astounding. So again, TrendSpider.com. You want to check it out. And also go to the Twitter feed, and you can sign up for the star-studded Lessons from Volatility Masters. I've seen all those guys actually in action, either through their Twitter or YouTube channels. And, it's free, folks. That's April 26th, 10 a.m. to 2:30 p.m. Eastern Time. And also, while you're there, while you're on Twitter, they do have a giveaway going on. You might be able to get yourself 1 free year of the TrendSpider service. But you can also get a free trial, and you don't have to win it. You could just go and get it over at TrendSpider.com. And after you try, you're going to want to buy. It really is a value proposition considering what you get. Yeah, there it is. There's the tweet. It's pinned at the top. Just go to TrendSpider on Twitter, and it'll be right there at the top. Very cool. So there he is, tweeting. I do it a lot myself. Any final wrap-up ideas for the viewers and listeners, Jake?
If anyone knows how to get rid of these Telegram spammers that keep spamming our comments, please tell me. But other than that, no. The biggest thing is if you do decide to sign up for this giveaway, make sure to do the hashtag #StayHomeAndTrade and enter your chart to make sure that you're entered to win. And through that, we will be picking a winner just based on the chart quality and just the use of the TrendSpider features in general. We really want to see, these users coming in and using the platform like we've really never seen before. And that's going to be a part of the reason that we come in and choose a winner. So definitely thank you so much for having me on again. I know that was a lot of information, and that's a lot of technical stuff to kind of grasp. And I want to mention that our YouTube channel, just TrendSpider, we have a ton of content that we're constantly teaching about raindrops. We're going over case studies. We're going over the market and then going over another video 5 days later and showing you what worked, what didn't, and why did it work, why didn't it work. And so we do have a lot of content to complement some of these features that you may find a little more difficult to use, such as those raindrops.
Very good. And again, stay home and trade. That's the hashtag. And it's also a policy I recommend. Stay safe, folks. This is a tough time for all of us, but if there's one thing that this situation cannot stop us from doing, it can't stop us from trading and making money. That's one of the few things you can make money doing in this challenging situation. You got to go over to TrendSpider.com. Check it out for yourself. Jake, thank you, sir. We'll have to have you back again soon. Thank you so much.
Thanks so much. Have a great week, and everyone stay safe out there. Thanks.